Hey guys, Tim Rhey here, True Rate Mortgage Group. Hey, I want to share a story with you today. I got a phone call today from a random guy named, we'll call him Bert. That was his real name, actually. He was a referral of another client that I had worked with, and he had been talking to some other loan officers. And, Bert was confused because he went to my social media and he saw that I had posted a bunch of stuff about the 10-year treasury, the bond market, and I had some other stuff in there. And he asked me, he said, why do you post all of that on your social media? He said the other people I've spoken with kind of focus more on like loan products and things specific to the loan process. And I thought that's a good question. And darn it, why does he think I was more concerned about why he was wondering why I would do that. Well, I thought it would be a good opportunity to explain why I watch the market, why I study the market. First things first, anybody in the lending industry can talk to you about a loan product or how to get approved. That's pretty much mortgage 101. The reason I study the market, I study the bond market, the 10-year treasury, I study the Fed Reserve, and I study the way they talk because I feel like that gives me an advantage. And actually, it doesn't give me an advantage, it gives my clients an advantage. Here's a really good example. This is crazy. And this has happened before, something very similar. Talking to a borrower, let's say on a Thursday, and they're ready to lock their interest rate and they're going to buy a rate down, let's say 2-point buy down. Okay, they're going to pay 10,000 bucks to get that 6% rate that they're dying for. Well, I could just lock it. But by knowing the market and knowing that a report's coming out tomorrow, but more importantly, knowing what I think is going to happen with that report and how it's going to trick the market and it's going to create a cascade of yield change in the market. Knowing that, what if I told Bert, I said, hey, that's not lock. Tomorrow's going to be an interesting day. I think you should wait. If we wait and the market improves, that same exact rate could cost him 1 point and not 2 points. That's a difference of $5,000. I basically put $5,000 in his pocket. I try to do this with every client. And that is why it's important to work with a loan officer who goes a little bit beyond the everyday basic loan stuff. Understand the market. Rates are determined by this thing called the market. And if you don't understand what can move the market, I think you're at a disadvantage. So that's why, and I hope that makes sense. But I told that to Bert, and we'll see how he takes it. He said, "Oh, I didn't. That's really interesting." So hopefully, I get to work with Bert, and I think he's going to interview some more loan officers. But I think I want him over today.